Good afternoon, everyone. This is Dan Bird with the Daily Scan for Thursday, March the 13th. We're coming up on the Ides of March, so be careful out there. And the bloodbath continues. There's unrelenting selling. There's no sign in sight that there's going to be a rally of any kind. So we have to just accept that. Fortunately, hopefully, most of you are in cash or protecting yourself, moving your stops up, or actually using inverse ETFs to make money during a downtrend. I'll show you how you can do that in a second. As always, I'm not a financial advisor, so anything I say is for educational purposes. You have to do your own due diligence and understand your own trading style. All right, let's jump into it and look at what happened today. The market bias went down again a little bit. It's hard for it to go much lower, frankly, but it could. I mean, right here is 35%. I've already had to move this down one time. That's the lowest it's ever been since I've been tracking this. So we'll see if that continues. If you look at the matrix itself, you can see now that in the index section, everything's red, short term and medium term, all red. The only thing green is long term. And in the sector area, we've got 4 medium term greens, but they could be getting ready to change also. But overall, if you just look down the list and everything, pretty much everything is red until you get down here to metals. Gold is still doing really well. Look at gold on this chart. You can see it had a great day today. Continues to go up. It's a testament to what I showed you earlier this week, something that I added here comparing Bitcoin and gold. On the charts page for subscribers, the charts page right here on the left-hand column, there's a little Bitcoin section, and you can see comparing the Bitcoin ETF to the gold ETF. And it shows you here, this would be the time to get into gold. This was in January. And this would be the time to get out of Bitcoin. And right now, Bitcoin went down again today. So it does not say to get back in at this point. But this thing has actually been working pretty well. So I'm going to keep an eye on this. You can see gold right here, just like what I showed you before. It's breaking out. Now it's hitting all-time highs once again. So this is where you would have sold gold and buy Bitcoin back here. But just by watching this little chart will give you a good idea of how to move back and forth between these two ETFs. Let me know if you want me to compare 2 other symbols, if it makes sense. Gold and Bitcoin seem to make sense because they don't always go, they're not always correlated. They don't always go in the same direction. And that's kind of what I'm looking for in this right here. Okay, so let's jump back over here. There's something I want to show you that one of my subscribers pointed out to me, and there's lots of charts over here. So certainly I don't get a chance to look at them all the time, but I do occasionally. And there's one down here that's called let's see if I can find it. It's a pretty cool chart. He asked me to add in the recessions, the full recession right here. It's called Fed rate, 30-year mortgage, and 10-year yield, comparing all of these rates together with each other. So, and all of the charts on this page, by the way, update automatically. So, and you don't necessarily need a subscription to stock charts. Some of these you would have to have one. I'm not sure if this is one, but most of them you don't need a subscription just to view the charts. So here's what it looks like. All right, so we've got the Fed rate in green, the 10-year in pink, the 2-year in gray, and the 30-year mortgage in blue. And at first, I just had a vertical line showing the beginning of each recession, but he asked me to put in the full length of the recession. So I've done that now. And one thing that hopefully should jump out at you right away is the slope of the Fed rate, the green line. You can see back here, it was going up and then it rolled over right into the recession. This one rolled over right into the recession. This is COVID, which was a surprise recession That one rolled over just before it, and look where we are right now. So implying that perhaps recession is on the horizon. And look at the 2-year. 2-year also does the same thing. 2 years heading down right there, heading down right here, heading down right there, heading down here. Can't go back into the 80s, so I'm not sure about this one, but every other one was looking the same way after a big run up, starting to roll over, and then the recession happens. So that's one of the components of a recession that we have to be aware of. And I said last year that I thought a recession could happen sometime in Q2. So we're coming up on Q2 pretty soon. We'll see. The market usually reacts well before the actual news or before the recession. So that's part of what could be happening right now, in addition to everything else. Tariffs and overvalued market, and the fact that it had run up so much and it needed to take a break anyway, so it was looking for a catalyst. All of those things combined is pushing it down right now. So let's go over here and take a look at, we'll look at some symbols in a minute. But I want to look at the different indexes. So S&P first. S&P continues to roll over, sitting right down here. It still has a little ways to go to get down here to the support. Not very much right there. So probably about 54.80, somewhere in that neighborhood. And it looks like it was trying to head there today. Go back and look at the NASDAQ 100. Same thing. So NASDAQ 100 looked like it was trying to start a rally yesterday and didn't. Sold off again. But interestingly, the low was pretty much right where 2 days ago low was. So it did not take out that previous low. And it closed a little bit above it. The close was lower than these other days, but it has not yet taken out that low. So we can watch for that. But this one, again, the support is way down here. So that's where we could be headed. Let's look at Bitcoin. Bitcoin sold off again today as well. Had 2 days where it was really trying to rally, came back down, and actually closed at the open from 3 days ago. So it still has not gone down and taken out these previous lows back here. By the way, on this Bitcoin chart, I added MicroStrategy down here just to give you a sense for how these two are correlated, how they kind of move together. So MicroStrategy is down at the bottom. It kind of went sideways today, where Bitcoin went down today. Let's take a look at the bottom finder. See what that looks like for the NDX. All right, so we're in the 10% area. We're at 9% right now. I have stocks above the 20-day moving average. We are at 24%, so not quite below 20 yet for stocks above their 50-day moving average. And the 200-day is at 35%. I like to see that one at 30. So again, not quite there. Could be more downside, a little bit more downside. The VIX, you can see, ended at 24.66 today. A little higher than yesterday, but not significantly so with the kind of sell-off that we had. And again, the sell-off ended with a blue bar, which is actually neutral, and did not take out 2 days ago low. Ended right about the same place. So we'll see what that means in a minute. And in fact, I'll show you something else here. We go back to the home page and look at the new Dow Theory that I did on Technical Tuesday this week. So this is the old Dow Theory. This explains what Dow Theory is for anyone that wants to read through it. You can click here and get more details on Dow Theory. This is the old one with Dow Industrials versus Dow Transportation. And you can see today, both of them selling off again. You see back here in January, when the industrials made an equal high, the transportation was making a lower high. These blue vertical lines are the same date. So that was the warning back here, even in January, that the market was probably ready to roll over. This is the new Dow Theory. So I'm going to show you the NASDAQ 100. This is equal weighted NASDAQ with equal weighted S&P, and they both look similar. They both went down today. Their momentum is accelerating. Lower volume, though, interestingly, even with a big down day, we had lower volume. Now, the next one I want to show you is communication services. I'm going to save the NASDAQ 100 for last. Communication services, same kind of thing. So back here in February, it was making a new high, and the internet group was making a new low. So that's the warning signal. Today, they both went down. The communication services component went lower in the previous 2 days, as also did the internet group. Lower volume also on both of them, but still accelerating on the momentum down at the bottom. All right, the last one I want to show is NASDAQ 100 versus semiconductors, and this is where there's a little bit of divergence. So what you can see is, again, back in February, made new highs, but we made a lower high over here on the semiconductors. Today, the NASDAQ 100 went down, had a big sell-off today, it actually did go down a little bit lower than 2 days ago, but closed a little bit higher than the low. Volume was a little below average, but momentum is still accelerating to the downside. However, look at semiconductors. That doesn't look the same. Unlike all the other ones I just showed you, this one does not look the same. So while we've got an equal low right here, we have a higher low over here. So this could be signaling that a rally might start here soon. And I've been talking about that for a while, but it doesn't come through because there's so much other noise in the market. And now we have a government shutdown on top of that. Government shutdowns can be temporary. Anything like that can be temporary, can affect the market temporarily, but it won't affect it in the long term. But this is interesting to me. So momentum is starting to curl up in this case, whereas over here, it's still accelerating down. Very low volume and actually putting in higher lows. So this could be the start of something. It's the only one of all of those that I showed you that's like that. But I just thought I would point that out because it's very interesting the way that looks. All right, let's take a look at, let's see. First, I want to look over here. We'll look at these here first. I'm going to do a scan for, this is going to be a bearish scan. So I'm going to scan for, I haven't done a daily scan in a while, so I just want to see what's here. 21 crossing the 5, that is a bearish scan. These are all the stocks that are on it. CNH, if we look at that, this is a good example of a shooting star at the top, making a high failed breakout, shooting star candle, and now 3 days down after that. See if there's anything. Fastenal is one that somebody asked about. This also has a shooting star candle right there. And after that shooting star, 3 days down. So these don't always mean it's going to start moving lower, and you have to have confirmation from the next day, but they are pretty reliable. So I always pay attention when I see something like that. There's also a bearish engulfing candle on the weekly chart. So this one could continue down. Gorilla Technology had been on the top 10 list for a while. Actually hanging in there pretty well. Let's see if there's anything else of interest here. Not too much here. All right, let's take a look at some other charts that people have asked about. And for that, I'm going to go over to here. And we'll start with Micron. So the question on Micron was, they have earnings coming up next week. You can see right here on the 20th. So that is a week from today. They will have earnings. And just looking at the chart, this whole thing has been going sideways. This is one that kind of works along with NVIDIA. Look how it's hit the 200-day consistently, keeps going up and hitting it, and getting rejected over and over again. A little above over here when it was first starting, but continually gets rejected at the 200. Looks like it's trying to come back again. Does have a shooting star candle, but it's not at the highs. So it's not as reliable. There's one right there at the highs. But this one means that it failed its breakout today, but the whole market went down today. So that's not surprising. But one of the things I like to do when I'm trying to decide whether I should hold something into earnings is I want to look at this on a relative chart. So here's the chart here. There's the 200-day again right there. You got the 5, the 21, and the 50-day right down here. Those are all below it. So all the moving averages are stacked to the downside. That's bearish. We want them to start moving up, become stacked to the upside. Here's what it looks like when things are stacked. So that is stacked to the downside. That is bearish stacked. Over here on the left is stacked to the upside. This is where all the fast moving averages are on top of all the slower ones. And because it's really been moving sideways for so long, that tells you that it's mostly down. Even though it's sideways, it's mostly down. So if we go back over here and look at the relative chart, now the blue panel tells you how it's doing versus its own industry group, and it's outperforming its industry group. So if it's above this horizontal line, that's the 0 line. If it was right on it, that means it is keeping pace with the industry group. And of course, that's semiconductors, which I talked about already. So it is outperforming its own industry by 8.5%. Next is how is it doing versus the S&P? And it is just recently outperforming the S&P. So those are the two most important ones, and both of those are showing that this actually could have fairly good earnings, because about 3 weeks before earnings, there's a quiet period where the company can't talk to analysts. So if analysts are buying before that 3-week period, then whatever they heard before that, they liked. So the relative charts are showing positive momentum. The accumulation distribution, however, is still heading down. So it's implying that there is distribution going on through this period right here. It's below the moving average line. Let's continue on down. This is how is its sector, technology, doing versus the S&P. Here's the 0 point. It's underperforming. So technology is underperforming the S&P, which we kind of have known that. Next one is how is its industry, its peers, performing in its own sector. And in this case, it's right at 0 and right at the moving average. So it's moving along right along with its sector. So semiconductors and technology are pretty much moving along together. And the final one is how are its peers, the industry group, doing versus the S&P. And in this case, it is below 0. Now, the bottom 3 are not too convincing, but the most important one is the first one. How is it doing versus its peers? And then how is it doing versus the S&P? And you would like to see its peers outperforming the S&P as well, which they're not. That's the yellow one down here. But these two are okay. But to me, this is not convincing enough to hold into earnings. So I probably wouldn't. I would, depending on how big of a position I had, I might sell half and then see what happens in earnings. But, and depending on if you know the fundamentals of the company as well. Here's a longer range view. You can see that very sloppy basing pattern down here. So it needs to get through the 200 at 105 really to start making a move. All right, next one is CTAS. This is Cintas Corporation. They make uniforms, and it is rolling over along with the rest of the market, starting right here at the end of February, continuing to go down. It's below all its moving averages, including the 200. It's below the cloud. So this looks very bearish. very bearish chart in this case. Let's see how it looks versus the, so this is the Keltner channels or the extremes, basically. So when it gets to an extreme down here, this is 4x down here. It's in the 3x area right now. So it might have a little more to go. You can see on the ADX, the way to think of the ADX is the red line is bears. What are the bears doing? How strong are the bears? The green line are the bulls. So if the red line is moving up, that means the bears are stronger, while the green line is going down. That means the bulls are weakening. In this case over here, bears are getting stronger and bulls are weakening. And at the dark black line is basically the strength of the move, the trend, and it's below 25. So it's a weak trend right now. You can see it's just kind of gone sideways. But bears seem to be in control, and they may take it down to the bottom of that extreme point right there. All right, let's look at Kava. I mentioned, or I said on the channel that Kava looked like it was trying to put in a bottom because it was curving up. Let's look at it here. You can see it a little bit better. If you forget about today's candle, these right here, looks like it was curving up even as the market continued to go down. And you can see the bears are starting to decline. The bulls started to come up a little bit yesterday, but today it all fell apart. So as always, none of these things are set in stone. It does not predict what this is going to do. It just helps you to manage risk. And in this case, if you thought this was going to go up and jumped in right here, then you would set your stop right here at about 80. And if it did reverse, which it did, then you'd be out with a very small loss. That's risk management. By the way, I think next Tuesday, on Technical Tuesday, I'm going to cover the risk calculator that I have on the website and show you some ways to do risk management and position sizing. All right, so that's Kava. Kava is not looking too good right now. If we look at it on a longer term basis, it's way down here. That is clearly a falling knife. Support is right about there. Let's draw it in. Support is probably right at this area. It's pretty much where it is. So if it drops through there, it's likely headed down here to 60 if it drops through this support level. So 60 could be the next stop, unfortunately. So that's the what I'm seeing on Kava. Interesting up here, this was earnings, and they gapped up on earnings, had great earnings, gapped up, and then sold off the whole day, all the way down, creating a black candle. And then the next day they sold off even more. So it closed the gap right there. And this was probably the warning sign. This pattern right here is what I call the giving you the finger pattern. So that was the warning sign of what was to come. It doesn't look like it's over yet either for Kava, unfortunately. All right, SMCI. SMCI is gapping all over the place, gap happy chart. So it went up above the 200, tried to make a run, had two spinning top candles, and then reversed. Came back down, tried to make a run yesterday, and then came back down today. So this is in computer hardware. It's above the cloud, which is good, but it's below the 200, and it's above these. So it's kind of in a no man's area right here, kind of a neutral zone that's trying to decide which way to go. And if I were to draw some trend lines on this, I might put them like right here. You know, trend lines are not exact, so, and then maybe something like this. So could come right down to this point right here, just below the 50. And then, well, that's a symmetrical triangle. So it doesn't tell you which way it's going to break out. It could break out either way, up or down. So that's what SMCI looks like. And then finally, let's look at BDX. Very, very sloppy looking chart. Becton Dickinson is in medical supplies. Their yield is 1.87, so it's less than 2%. They are optionable. The next earnings is on May the 1st. So they're pretty far away from earnings, but huge volatility in this. And this is what the person I think said, that this one went way up here to 235 and then came all the way back down again. Huge volatility. So I'm not sure what is going on with this to make it do that. But I mean, I couldn't even draw any lines on this one to tell you what it's going to do. You potentially could put something down at the bottom for support and see if it can hold that support, like right down there. So it is this is a weekly chart. So the last couple of weeks, it is making higher lows. So if it continues to do that, it will be positive. But it really needs to close above the 50-week moving average. And preferably above the cloud right here as well. So right now, that's not happening. I don't know what to say about this one. This is a good one if you want to do an iron butterfly. For a long range iron butterfly might work on this. So here's the green actually is above the red. So bulls are trying to outpower the bears right there, but it's still below 25. So anytime any of this is below 25, that usually means it's just moving sideways. So this could go back and forth just like it has back here a few times. So might not be too much help on Becton Dickinson. I don't see anything in here that would excite me for sure. But anyway, that's what it looks like. All right, that is it for today. Let me quickly go over to the portfolios page and show you the market timing strategy. As I mentioned earlier, we are in cash as of March 7th. That's on the weekly, and you can look at the weekly chart right there. You can see what it looks like. Everything is below all the lines. So it's got 3 bears, short-term, medium-term, and long-term bears right now. So it's continuing to go lower. I still would not get into the inverse on the long term yet, because I'm expecting to see a bounce at some point. I'd actually like to see a rally and then get in at the top of the rally. But take a look at the short term, which we did go short on February 24th, right there. And it is now up 8.8%. And if you had done the inverse SQQQ, it would be up 26% since the 24th. So we're at the 13th right now. So what's that, about 3 weeks worth? Would have been up 26%. And if you click on any of these, you can look at the chart. So this is the inverse ETF. And there's the trend line right there. So this one is not going to go back to cash unless this comes down and closes below this uptrend line right there. So we will definitely have a gain on this. We will not give the gain back, but that's what I'm looking at. This is a short-term one, remember. This is a daily chart. So if we do get a rally, this is going to come back pretty quickly. But as soon as it goes below that line, we'll be out. Whatever day it is, we'll be out. So that's it for those that are watching the market timing strategy. You can find it on the website on the portfolios page. By the way, what I'm going to do next Tuesday, if you hover over this More button, you can see the risk calculator demo and the risk calculator download. For those that are annual members, you can download the risk calculator. I'm going to show that next Tuesday and how to use it for managing risk and position sizing. All right, that's it for tonight. Thanks for watching. Be safe out there. Don't do anything too crazy. And the market just seems like it just keeps wanting to go down. So we'll see what happens. Next week is options expiration, by the way. So Max Payne I'll probably do on Monday if I have the report from Tom Bowley by that time, and I'll explain what Tom Bowley's website is all about. And if I do, I'll cover Max Payne. I expect Max Payne to be opposite week. So I expect it to be green for Max Payne for next week. But we'll see. We'll see. All right, that's it. Thanks for watching, and I will talk to you tomorrow.